In the last 6 weeks, I've made over just 4%. And in this video, I'm going to show you my journal, my win rate, my FXbook verified results, some of the good trades, some of the bad trades, what I've learned like emotionally and psychologically. And at the end, I've got a brief plan of how I plan to scale with this system. Now, if you were in my Telegram in the last 6 weeks, you'll have seen the trades that I took and how they played out and how I got to 4% growth. But I'm just going to show you more in this video, including the strategy itself. Now, my approach and results are nothing ridiculous. 4% is nothing crazy. You see people out here doubling accounts every day. In my opinion, this is a more sustainable long-term way to, have growth on your account. Small wins, small losses, it helps keep you emotionally stable. And, most people can't even break even. So 4% in 6 weeks is not bad. If you continue that for the year, it's 34% in a year, which again is pretty outstanding. So here's my FXbook verified results. This is my account. You can see it's my login up here. I just started the 3K account not long ago. It says real there. I can refresh it as well just to prove to you all that this is real. And here you can see the equity curve, the percent growth, which was, 4%, monthly gain, drawdown, all this stuff. We're going to come back to this later and dive into the statistics of what's happened. But very briefly, we're going to go through what my strategy is. So the first thing we look for are some clear support resistance zones where price has clearly spiked in the past, not where price has got there and gone sideways or something, where it's really clearly rejected. And ideally 2 times is the sweet spot. Now, step number 2 to my strategy is I just set alerts at these zones. And then when price gets here, we do one of 2 things. So the first thing that I'm looking for is I'm looking to see if price rejects. I don't just simply enter a sell when price gets there. That's not what I do. And it's a certain type of rejection. I mean, anything will really do, but as long as the rejection candle is not engulfed by the previous candle, then usually I'll go for it. The other option is that it doesn't really reject. Maybe it goes a little bit sideways. Nothing really that strong is happening. In which case, I anticipate it to break the zone. And then if it breaks the zone, simple. This alert that was there, I just simply set a new one. So now if price comes back to this zone for a second time on the other side, I'm just doing the same thing, but in reverse. I'm looking to see for some rejection. The moment I see some rejection, I'm going to look to go long. Typically, I have a fairly tight stop below the wicks out the zone, and I always go for a 1.25 risk to reward. And it's always nice when you're targeting, not a higher high. So if price was coming here and your target's just here, this is a lot more likely to hit than if your target was up there, because you're asking for a new high. And frankly, if you're asking for a new high, what's to say it could not just keep going all the way up? So here we have my journal. This is back from 2023, but if we scroll down, we go to the 2024 section. And here from January, you can see a lot of January and February was sort of break even. It was like few winners, few losers, few winners, few losers. March, you could see, was a slight loss. April was a bit of a decent gain. May, we're up right now, pretty decent. So you can see the last 6 weeks sort of starting from here where it says start 3K camp. That's the results. Obviously, I've proved it to you in my FXbook that this is what's happened. We're going to go back to that in a moment. Now, in here, I have my risk structure, and this is essentially how I increase my risk, but not double down. I don't just double down every trade and try and chase the loser. Let's say I risk $30 on a trade and I lose. Well, then the next one I might risk $35. And then if I lose that, the next one might be like 42, 43. So it's very small amounts of risk, right? And a lot of you will say this is gambling. And to be honest, trading in itself is gambling. Like, it is gambling, especially if you do spread betting account. You don't even pay tax on it. So it's completely gambling. Now, of course, this comes with risk. Trading in general comes with risk. What I've found is that I've studied my own journal and I've been trading profitably for around 10 months. And in these 10 months that I've been trading profitably, I've never had a losing streak more than 4. Now, the way I increase risk, I'm prepared to lose like 10, 11 trades before I blow the account. And if I blow the account, then maybe I should just stop trading altogether and relook at my strategy anyway. What this does is that my losing streaks are so much smaller than what they would be if I just risked a standard risk per trade. I have a 50% win rate, which you're going to see in a moment with my FXbook. Now, that would still be profitable with the risk reward I use, but I've gained a lot more than what I would have otherwise. I'm not saying you should do this. I'm just saying this is what I've been doing. It's been working for me for a while now, and I'm just showing you what I've done. Okay, so if we go back to my FXbook, you can see here on the left, like the gains and stuff and the equity curve. We had a bit of drawdown at the end of April, but it came back. Now, here's the interesting bit, and all of you as well watching, I recommend that if you're trading, whether it's a demo or live account, you hook the data up to my FXbook. It's really easy. You just create an account portfolio, add account. You just type in your account number. Now, when you get this, it then gives you all this data which you wouldn't be tracking yourself, right? So I've only done 10 trades on this account so far. 50% win rate, you can see here. I've won 5, lost 5. I've won 2 longs, 1 3 shorts. So you can start to see maybe, you might find that when you trade long, you have a much higher win rate than when you trade short. In which case, maybe you should just stop trading short. Another thing here, you can see your best trade, your worst trade. Now, this is usually quite an important one. If your worst trade is quite a lot bigger than your best trade, doesn't necessarily mean you're not profitable, but definitely not as promising. You can also see here the average length of your trade, which is cool. 11 hours is a nice time. I like to just be in one trade at a time, so I wouldn't want it to be too long. And then here on the right, you can see profit factor, Sharpe ratio, and the Z-score probability, which is quite important because for my strategy to work and for anyone's strategy to work, I need to have regular winners. So in here, it's saying that there's a 26.62% chance that after you lose, you will have another loss. And same for a profit, right? So so every now and again, we have mini loss streaks. Every now and again, we have win streaks, but we keep the loss streaks to a lot smaller loss the way that I increase risk. Now, all of this is shared in Sam's Effect Society on my journal. We just go to this page here, risk increase structure, and I go through it in there, and it's quite clearly outlined how I do it. Okay, now the last 2 things we're going to go through was the emotional aspect and how I plan to sort of scale this system. So emotionally, I found that it really helps me if I have a repeatable strategy and I just repeat it no matter what the market conditions are. Okay, obviously the market has to meet my criteria and my rules, but once I see a setup, I take it. That's it. I don't take it and then think, oh, maybe this time this might happen, so I'm going to exit early. I don't do any of that. I've got my rules. I stick to them. Try and be quite robotic. I'm not saying that intuition won't help you, and in fact, I've definitely got some intuition, which I use now, and I avoid more trades. I trade less than I've ever traded. Having a repeatable strategy that makes the data so much more useful when you go back through it because it's repeatable. You've done the same thing each time. Whereas if you've done a different thing every time, the data is a bit more random. It's not as helpful. I've also found that during a losing streak, like the other day, I had a losing streak of 3 or 4 trades, and you start to doubt yourself a little bit. Okay, I knew exactly what I was doing. I still stuck to the game plan, which I'm happy of, but it's all a test, right? And when you have these little losing streaks, you do doubt yourself. You're like, you forget everything you've done because you're on a 3 trade loss streak or whatever it is. You just need to try and forget that and move on to the next trade and keep doing what you're doing. Now, if you're not yet profitable, just trade on a demo. And even when you're on a losing streaks, keep doing the same thing because you want to see how long is the average losing streak? How long is the maximum losing streak? You want all this data so you can build yourself a strategy in the time to come. One thing is that you need to accept this is a form of gambling. You are risking money to make money. That's gambling. I think this mindset can help because a lot of people sit down thinking that this is a job. And while you are sitting down and putting time into this and, tracking your data in your journal, you are essentially risking money for money as well as your time. So it is a form of gambling. Just make that clear to yourself in your head. So if you lose, expect to lose. It's completely normal. No one's got 100% win rate. You're going to lose. But whilst I've been trading, I know that I've created this system and I've gone through my whole journal. And I know that if I traded this system from the very start, I've been profitable for well over a year and a half now. Last bit very quickly is a plan to scale this system. So I've created what I think is a profitable system, and now I'm looking into how I can get more funding. Now, the first thing that I think of is prop firms because it's very accessible. You get an account, you try and pass it, here you go. But the almost the cons, I don't want to say a scam of the prop firms is you could get a 50K account where actually it's a 5K account because they give you a 5K loss limit. So you pay, a decent amount for a 5K account. I like to risk 1% per trade. So if I got a 50K account, which is actually a 5K account, I'd only be risking £50, $50 per trade. So I need to get quite a few of these where it gets to a point where actually it's starting to impact my life a bit. I'm just going to show you quickly what I've done on this free trial prop firm, which is what I'm going to plan to do on the real one. So here you can just see I've logged into FTMO. This is my account. And I just took this trial prop firm, just a 25K account, and I passed phase 1 in 1 trade. And essentially, the plan that I'm looking to do is to just risk the whole daily limit to make the profit target. So you get sort of 2 bites at the cherry. So you risk 1250, and here it says the target's 1250. In the real challenge, the target would be 2500. So I just got a 2-to-1 winner. So you can see that I won there, 2500, and that would be phase 1 complete. And then I go to phase 2, and phase 2, again, I'd risk the daily limit, but I would just go for a 1-to-1 trade. And that's essentially it. What I've also learned is going through my journal is that every now and again, this happens where I catch a 2-3 trade win streak where this criteria is met. Now, it's not very common. I'm waiting for a period of results to set up, and then I'm going to buy a challenge and I'm going to do this. And everyone following me in Telegram, I'm going to update you along the way of when that happens. So I hope you found this video useful. Any questions at all, drop them in the comments. Let me know if you think, I'm right, I'm wrong, what I'm doing is good, bad, silly, whatever. Let me know. Cheers.